RCM recently appointed Jan van Niekerk as its CEO. Almost at the same time, it prepared to celebrate its 10th anniversary. The firm has come a long way since Piet Viljoen left Investec Asset Management to establish it in 2003. The company has developed a strong presence locally with assets north of 20 billion rand, and has also been developing the capability to perform investment research in other markets. Piet Viljoen and Jan van Niekerk join us in studio today and talk to us about where the firm perhaps is going for the next decade. So maybe appropriately, let me begin with you, Piet. Now, you left Investec 10 years ago. You are now managing north, as we put it, of 20 billion rand. Are you where you wanted to be when you established it?
I think we're probably a bit ahead of where we wanted to be at this point. When I left Investec Asset Management, I really didn't have a plan mapped out of where we were going to go. All I knew was there was a gap in the market for a fund management firm to look after clients' assets responsibly and look after the best interests, and not necessarily after the business best interest.
Right.
And there was a gap in the market, and that's why we started RCM, and so far it's proven to be fairly successful.
I suppose it's appropriate to ask at this juncture where you see the company going in the next decade, if it's going to be around in the next decade.
Yeah, I think Jan might be a better person to talk about that, because that's his job to lead the firm into the next decade. But yeah. I think in a nutshell, I think what we do as value investors is not only applicable to the South African market, it's also applicable to the global market. And I think Jan has some pretty pertinent ideas on where he wants to take the firm.
Absolutely. Jan?
So I think, as Peter said, the philosophy in which we manage money is applicable not only in South Africa and globally. RCM has followed that philosophy internationally as well as in South Africa for a number of years already. We've established a track record of more than 4 years already by investing money globally. And I think we're one of the few firms that actually has a proven track record on a significant amount of money, managing it from Cape Town and South Africa. So we're very keen to grow the firm and to grow our capabilities and also to grow the business to become much more of an international investor than just a South African focused investor.
Sure.
Jan, you joined obviously from Citadel, and you obviously had the chance at Citadel both to study Piet at Investec, and then obviously you were one of the early backers of Piet and RCM with actually giving Citadel money to them to manage. What struck you, what convinced you that Piet was going to do the right job for your investors' money, and what gave you the motivation to be able to give him that money almost from the start when he set up RCM?
You know what, in financial markets, there are lots of people that's interested in stock markets and doing analysis and talking about companies and talking about the stories. But there are very few people that are clear thinkers. And from the first time I met Piet and started asking him questions about how they think about investments, it was clear to me that Piet was one of the few people that could think about markets very clearly and could break down stuff as simple as possible, but not too simple. So when he left Investec and set up a firm to apply those principles in a way where it also blended with the ethics of treating your customers fairly throughout the cycle, that made a lot of sense, and that gave the comfort. And then over the years, and it was Citadel's clients' money, it wasn't Citadel's money, and we were just custodians of that assets. But over the years, it became quite apparent to me that the way in which RCM think about clients' money is always with the client's interest first, and only after that about the firm's own interest. Through a proper investment cycle, became clear to me that RCM stuck to the investment principles. If you remember back in 2007, 2008, where there was quite a big discrepancy in valuations in the market. At some stage, the RCM portfolios performed very differently on the negative, so in a bad way relative to the indices that were, doing incredibly well. But in the process, they protected clients' capital when the eventual calamity came in markets. And I think that was, to me, was the test that, many people can tell you a lot of things about how they invest, but in the end, your portfolios have to act on that belief, and they've proven it as a track record.
We've obviously, Piet, we've talked about, I've been covering RCM for a couple of years as well, and the philosophy is very well articulated, and it comes across that the investment discipline to the value investing approach has always been a very disciplined approach. Has that always been the case for you over your career now that spans about 25 years? And I'm interested to also find out how that value approach, has it changed with the times and with the different market conditions?
So that's actually an interesting story. I mean, I started my investment career about 25 years ago with a small firm at that time called Allan Gray Investment Counsel. They were a tiny firm and they just lost half their clients because of relative underperformance. And the big firms of the day, 25 years ago, were firms with the name of Cyfritz, Managed Assets, LibAm, and also UAL Asset Management. Those were the big firms that were taking all the flows. They were not value investors. Allan Gray was a value investor. And today, 25 years later, Allan Gray is still there. Some of those other firms are not there anymore. And I think that shows that value investing, although there are short periods, there tend to be shorter periods when value investing is out of sync with what's happening in the market and it looks pretty dumb and it doesn't do as well as some other guys. Over time, it wins through. And that was the first lesson I learned from that tiny little firm, because it was a tiny little firm at that stage, Allan Gray. And I've taken that through my whole career, that value investing works. And the reason it works is actually very simple, because you don't lose a lot of money when things get tough. Value investing protects capital over time because you're buying assets whose prices are very low compared to the intrinsic value of those assets. So, and that's the key to successful investing over time, is not to lose money. The winner is not the fund management firm or the investor that makes the most when the going is good. It's the one who loses the least when the going gets tough. And the going gets good and it gets tough. And those periods normally follow each other.
Yeah.
So that's what our whole philosophy is grounded in value investing. And the reason why it's grounded in value investing, because it works, and the reason it works is because you lose less when things get tough.
Yeah. Jan, I wanted to come back to you because you're sitting next to him with the track record that he has, and you now being asked to take over and carry that forward. Weren't you intimidated?
Luckily, Piet and I know each other long enough, so no, I'm not intimidated. I think I'm actually more excited to be able to join the firm. You know, Piet has been the custodian of the investment philosophy in the firm, but you know, RCM is bigger than that. We have a whole team of analysts and portfolio managers, and I think that's the base that we have to be able to grow the firm. You know, to become much more of an international investor going forward, is because we have the capacity to do that.
Just in terms of that, Jan, you know, obviously this is an interesting period. As we say, we've got a fantastic track record here. You're now developing the capability to research stocks overseas in foreign markets. Is there not going to be a bit of friction now? How do you make sure that the investors' needs are met first, at the same time being able to grow a business? And then perhaps we can start with you there, Piet.
Yeah, look, it's not a capability we're developing, it's a capability we have developed. We've been managing global assets for 7 years now, and we have a track record in a global fund for 7 years, and it's done fairly well, if I may state it that way. So we do have the ability, and we think it helps all our clients. The fact that our analysts not only cover South African stocks, but they cover similar companies that might be domiciled in the UK or Europe or Japan or whatever. So they cover companies all over the world that operate in similar industries, and they can then compare these to their South African counterparts. So it actually helps in the analysis of the South African situation. It doesn't deter, it helps. So we think that's key in that whole process. But fundamentally, the reason why we place our clients' interests first is because our analysts and portfolio managers are significant investors in the funds we manage for our clients alongside the clients on the same terms.
Right.
And that is the incentive.
How big is that capability, and what are your plans going forward?
But I think Jan is a good person to answer
Absolutely.
that.
Just take it up.
Back to you,
Yeah. We have a team of analysts of about 14.
Yeah.
And as Piet says, we have been investing money overseas for a period. So we're not developing. Every team have to develop over time, but we're not only starting now.
Sure.
So it's a process that's in place. It's a philosophy that's in place. The structures, etc., that's in place. So. One of the beauties of an investment firm is that, as your assets grow, you don't need to grow the number of people that's involved in it. We have found that, the best investment firms with the best long-term track records are those firms where you don't have a high turnover in the staff, where you have a smallish group of people that are like-minded when they think about investments, when they do analysis, when they manage portfolios, and where they keep on applying that process for a long period of time. Because, we're investors in these funds clients. So we have a long-term objective in terms of the returns we want to achieve for ourselves and for our clients. And that's why it's important to have your team stick together for a long time. And that's why we believe an asset manager should be a privately held firm, not a publicly held firm, so that the shareholders can take the brunt of the swings in the profitability of the firm over time, but you keep on putting your clients' interest first.
So this company is not going to list out. I think we pick up that message very clearly. But you are on 40 now. Are there plans to grow that number?
Again, as I say, we don't need to grow the
Right.
team in order to grow the business. I think we can quadruple or even more our assets over the next number of years without adding any single person, to the investments and the research team.
Sure.
It's a tough one because obviously your success becomes your Achilles heel, and as assets grow, we've seen many firms have incredible success, and then they get the assets that come into their funds, and it becomes harder and harder for them to try and maneuver and still deliver those returns. Is there a sort of size you're going to get to in the local market where you're going to say, right, that's kind of enough, that's it's going to start to impact on our performance?
Perhaps I think the point is the track record of ReCM is that there was a time in the past when ReCM said we don't think it's a good time for people to be investing in the stock exchange or in equity markets at the time. They actually closed their doors to new inflows at the right time. I think it's something that could happen in future. It's not the case at the moment. We have done the calculations to decide what an appropriate asset base is. We don't really talk about it publicly, but we have a very clear sense of how much money we can manage in South Africa, and obviously internationally, it's a much bigger number.
Absolutely. After the break, we continue our conversation with Piet and Jan, and we'll extend our discussion of RCM's investment approach.